Welcome back to my channel, Value Investors. In this video, I'm going to be analyzing Meta and making a decision on this stock. I'm currently a stockholder in Meta. I've owned the stock for years, and I need to make a decision on whether I should buy, hold, or sell. The stock has been going up very fast on price, and I wanted to see, should I lighten my position or continue to buy shares in Meta? This is a really fun stock to cover, especially when it's gone up over the last 16, 17 months as much as it has. Let's take a closer look at Meta. I'm going to evaluate Meta on three criteria. And the first one is all about the company. Do I want to be part owner in the business? Do I think the business is really unique or valuable? Do they have advantages that really work in their favor? Is it profitable? Do I think the industry is a good industry to be in? And do I think the management team's doing a good job operating the business? The balance sheet, is the balance sheet in good health, and is debt less than 3 times EBITDA? The stock price, is it at a discount or am I paying a premium? Based on the answers I get to those questions, I'm going to buy, hold, or sell Meta stock. The Meta business is pretty easy to understand because just about everybody's either a Facebook user, a WhatsApp user, an Instagram user. So you understand that they are the number one social network company. What's fascinating about the company is how they have really mastered marketing on their platforms. And that's why they generate so much revenue and so much profit. That is the engine of the company. And they also have other businesses. One of them that's really becoming really valuable is their AI business. They released a large language model, which is termed or named Llama. And that's going to be used by many different organizations and companies to build their AI applications. They also have the metaverse. And although that hasn't been fully successful, I know that some pieces of it have been really successful, namely the Ray-Ban glasses, where people can go around with Ray-Bans having cameras. And it's really a popular device they've had success with. Overall, the company is fantastic. And I really tip my hat to everybody at Meta that's an employee or a management. They are an exceptional company and number one in their category by a broad margin. Let me look at the fundamentals behind Meta. First, it's a $1.28 trillion market cap company. It is one of the Magnificent Seven stocks. It's just really valuable and it's really expensive. Over the last year, it's gone up 191%. So that's just been a phenomenal appreciation on the stock price. Keep in mind, in 2022, you could have bought Meta in the 80s, like $87 per share. And you'd be sitting pretty if you really got into stocks and shares at that time. I did buy some shares during that time, but not a ton. I would just buy average in my purchasing of Meta. But overall, it is my number one position. And it's been great to see the stock really go up. The net income is really dynamic. They are very profitable as a company. Their revenue continues to grow year after year. Their PE, their forward PE is 24, which isn't too bad. The S&P is actually higher than 24. So if you look at Meta, it's the top company in their category, in their industry. And you can buy Meta at a reasonable PE if you compare it against the S&P. They started paying a dividend. They just announced that. They're going to be paying a 0.4% dividend to the shareholders. And overall, many analysts cover Meta, and overall, it's a strong buy by many analysts. Now I'd like to value Meta, and I'm going to value Meta based on two methods. One is by discounting their free cash flows that I expect in the future, and the other is by taking their earnings per share and establishing a value of the company based on their earnings per share and how earnings per share will be growing into the future. So first, the free cash flows for last year were phenomenal, $47.3 billion. Over the last 5 years, they've had free cash flows growing at 20%. And the revenue has grown at 18% if you look at the last 5 years. Now, I'm not going to be as optimistic and say, oh, they're going to keep growing their free cash flow by 20%. I'm going to grow them by 8%. That is conservative, but it's very reasonable. And then long-term growth of 4%. And based on those growth rates and the starting point, which is last year's free cash flow, the first 4 years basically look like this with regards to the free cash flows I expect. Terminal values all the cash flows after year 4, and those are growing at 4% per year. And it's a very high terminal value for all cash flows into the future. I'm going to discount it by 8% since they have a good balance sheet. And I get a value of all those free cash flows of $1.23 billion. I'm going to add the cash and take away debt. And I get to an equity value of $1,277 billion. And the market cap is right near it, pretty close to it, $1,280 billion. So the stock price is right around where the company is being valued. So it is fairly valued based on free cash flows. And I use conservative numbers. Now, earnings per share, they expect earnings per share of $17.60 per share. I'm going to use a PE of 30, which is reasonable. I think right now they're trading at 24. I think 30 is more reasonable because they're a growth company. They're number one in their space. And I'm going to grow the earnings per share into the future by 4%. And based on those factors and this calculation here, I get a value based on earnings per share of $449.80. Stock price is higher at $502. So there's actually a premium that you'd be paying on Meta if you valued based on earnings per share. Now I blend the two, but I put more weight in the free cash flow method, and I get to a 4% blended premium on Meta. Now, that's a premium on the number one company in their space. And as Warren Buffett and I guess Charlie Munger would say, it's better to pay a slight premium for a great company than get a great discount on just an average company. It's just better for the long term result. And in this case here, it's pretty much fairly priced in my opinion. So should I buy more shares in Meta, just hold my shares, or sell some of my shares? Well, let's take a look at the three criteria I look at. First, the company. I couldn't think any higher, any more positive about the company. I think they're a great business, leader in their space, run by an awesome team of leaders, great employees. They just have a really strong business that I want to be an owner in. Their balance sheet's in great shape, well below 3 times EBITDA. They don't have a discount right now. So I'm going to be a holder of my shares. And if we do have a pullback, which I am expecting, it's been 5 months of prices, stock prices going up. If we have a strong pullback, you better believe I'm going to add to my shares in Meta. Meta's had a great year and it's beginning the 2024 year just in a great rate. It's really rallied. Their last earnings were really positive. The latest revelation that they do have a very good AI play as part of Meta. Plus, they have so much access to data, which artificial intelligence really runs off of data. And Meta is one of the big data owners on Earth. So all those things just continue to make the company more valuable. And I'm glad that I'm an investor in Meta. I'll continue to hold my shares. It is my number one position, and it got there because it's appreciated so quickly. And I've bought shares pretty much for years and continue to buy shares as recently as probably a month ago. When on pullbacks, I will buy a couple of shares on strong pullbacks. Well, I appreciate you watching the video. I hope you found it interesting. Good luck investing in 2024.